Okay, let's go. Blockchain crypto gang. I'm not going to hold y'all. We're going to get right to it. So as you can see on the screen right now, crypto as collateral for mortgages. This is a real thing. I felt I wanted to share this story because unless you have maybe a subscription to New York Times, then you haven't really seen it because we don't see this kind of thing on the mainstream media. Hence why blockchain crypto gang exists. So if you've been paying attention, this isn't entirely new. Like you would have known that we're trending towards this. There's been experimental aspects to using crypto as collateral. A few banks have done so within the past few years. There actually has been a house minted as an NFT years ago. And of course, one of the links in the description is to Propy, which is an Ethereum token, which their whole platform is based on real estate, buying and selling homes, using a platform that uses blockchain and crypto, and therefore basically all your deeds and all that will become an NFT, and your ownership, your proof of ownership and all that is done digitally. Cuts out a lot of middleman, makes it a lot more efficient and quicker. So this is something that just one of the many use cases that blockchain has that makes it more efficient to do business and to be seen as a legitimate asset class. Even with the ETFs, excuse me, then we already knew that with that happening, it was going to legitimize Bitcoin as an asset and therefore also affect the rest of the crypto community as well. Because now it's being traded on Wall Street and owned by the likes of Fidelity and ARK Investment and BlackRock, et cetera, et cetera. So this isn't something that is very surprising, like I said, but it just shows how far this crypto and blockchain has come to the point to where now we actually have policies. So let me just show you something real quick. Let me show you this. This is something that I shared to Blockchain Crypto Gang. This is a buddy of mine who also is heavy into the crypto. And he shared this, and I shared it to Blockchain Crypto Gang. Ladies, it says, we have arrived, ladies and gentlemen. Crypto to be counted as an asset when qualifying for mortgage. You no longer have to use or have to cash it out to dollars. All right, so I'm going to just look at the blown up copy right here. Now, this is actually from the U.S. Federal Housing Order issuing directive to consider cryptocurrency as an asset in risk assessment. Fannie Mac and Freddie Mac. These are like the biggest housing platforms in the country. Order issuing directive to consider cryptocurrency as an asset for single family loans delivered to Fannie Mae and Freddie Mac. So they're saying just for single family homes. I'm sure at some point, and I'm sure it already exists, maybe just not broadly, for multi family homes, so if you want to, have a small, duplex or fourplex, you want to invest in a, 6-unit apartment or whatever, and you want to use crypto as a collateral. I'm sure if you already can't, if it's not as broadly accepted or recognized, I'm sure there's ways to do it. But let's go ahead and look at what we're at right now. Whereas Fannie Mae and Freddie Mac, the enterprises, maintain a pivotal role in U.S. housing financial system by providing stability and liquidity to the secondary market for residential mortgages through prudent standards to help ensure sustainable long-term home ownership, whereas cryptocurrency is an emerging asset class that may offer an opportunity to build wealth outside of the stock and bonds market. Whereas cryptocurrency has not typically been considered in the mortgage risk assessment process for mortgage loans delivered to the enterprises without converting the cryptocurrency to US dollar prior to loan closing. So yes, they're saying, yeah, you could took your crypto and then you convert it, blah, blah, blah. But now they're saying just straight up crypto being the asset that they will use for collateral. So what they're speaking of about having to convert it first, I guess it's similar to, let me show you something. This is a video that I did before my CryptTalk podcast was taken off of YouTube, but like like I've said before, I've already saved it on Odysee. So all the videos I did on CryptTalk podcast are still available on Odysee, and there is a link in the description for that. So this is a video that I did then, 2021, February 22nd, 2021. And in this video, I showed you how you can use DeFi to borrow, to do a collateral debt position. Meaning, basically what I did is I took my Ethereum, I borrowed against it, got a stable coin, and then I was able to switch that stable coin or whatever, or send it to my BitPay wallet. And I had to use it. I used it actually to, I blew out my clutch on my Audi, the Audi that I owned at the time. I have a newer Audi now. But I blew out my clutch during a snowstorm, and I got sticker shock when I took it to the shop. It was like $5,000, and it was like, man, I could pay $5,000. But instead, what I did is I decided, you know what? Let me go ahead and go to Compound. It's a DeFi protocol. Let me go ahead and borrow against some of my assets, which I did, because I've already done it before in the past with a smaller amount just to see how the protocol works. This is why I say I don't really mess with any protocol. I mess with the ones that are, tried and true, not the fly-by-night ones. So what I did is I borrowed against my Ethereum, blah, whoop-de-whoop, and that's how I paid to get my thing done. And then the market crashed a few months later, so I was able to actually pay it back for a lot less. So it actually worked out. And the beauty in this, I'm not sure if this is going to work for the housing situation using that as collateral, but the beauty of the DeFi protocol Compound is that when you borrow against your assets, unlike traditional borrowing, where you have a scheduled payment, this much due, blah, 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 this is the interest. Well, they'll give you an interest. I think the interest was like 1.9%. It was something crazy low. But the thing is, you don't have a payment schedule. The bottom line is, if you borrow 80% of the asset, you have 20% cushion. So you can leave that loan out for years, and slowly that 1.9% will eat up the cushion, right? Plus the fluctuation will also, be a factor. But if you don't want to make the payment for a year and then just pay it all at once, you can do that. You won't get no late fees. Worst case scenario is you don't ever pay it back. And what they'll do is once it gets to the limit, once that 20% cushion is eaten up by the interest, then it will just, once it get close, then they'll just execute the trade to pay off the loan and send you the change. So, you basically have your own terms, what I'm saying. And you can watch this video on Odysee. Let me get back to where we was at. Okay, let's get back to this. Where we at? Now, therefore, U.S. federal housing as conservator hereby directs each enterprise to prepare a proposal for consideration of cryptocurrency as an asset for reserves in their respective single-family mortgage loan risk assessment without conversion of said cryptocurrency to U.S. dollars. That's huge. Because suppose you're like some of us who has a lot of cryptocurrency that they don't really plan on selling anytime soon. And it's just sitting there, it's building over time and all that. But you want to make a major purchase. Typically, what you might have to do is, and I've done this before, is take some of your crypto and damn it, you're going to have to sell some of it off or whatever. Well, now you don't have to do that. Even for a housing mortgage. Now you can use that collateral, borrow against it, right? Without cashing it in for US dollars. You could just use that as leverage for your down payment. Now you have a home or a new home, a second home. Now, as you make the mortgage payments and you build equity in that home, if you want, you could take that equity and pay back and get your crypto back. Now you have your crypto and a home. This is just a different way to wiggle through wealth creation in a legitimate way. And now that crypto is being seen as legitimate, even in the sector of real estate and real world assets. It's just showing you how much more integrated and accepted and adopted this blockchain and crypto is becoming. It's just giving more options, right? That's what it's all about. Alternative options, different ways that we could, accomplish the same types of goals. So this is why I say Like, you want to know how to deal with these protocols because there's so many different ways you could do it already that exist. Now they're just linking this up for the traditional market, for the traditional banking to accept it, which is cool. It's cool. But just keep in mind, of course, there's going to be different things that, you'd benefit more if you know how to do it directly, and you'll have more options if you can do it directly. So, I mean, there's a reason why you're starting to see these large businesses and corporations and traditional industries now integrating into this, and this is why you don't really see it on the mainstream. This is why I always preach this same point. You don't see this on the mainstream yet, and you won't, but you see it more and more often now because they're starting to integrate this for themselves. I'm talking about large corporations, traditional banks, hedge funds, venture capitalists or whatnot. Now they're all getting into the market. And as they create their own products and services, then you'll see it more on the mainstream. But they're doing it. They're trying to do it before everyone else gets hip and wise to how they can do it themselves. This is why you don't see it on the mainstream. If they were to put this kind of stuff mainstream years ago, when it was already still possible by different means, then people wouldn't really need these now developing corporatizing of blockchain and crypto. So of course they have to try to get ahead of the curve. Now that they see this is where it's going, this is the wave, now they're getting involved. And once they're fully integrated and all these traditional markets and these large corporations and wells and businesses are all ready to go with their products and services, then you'll start to see it flooding the mainstream because they're going to want to steer the people towards their products and services. And there's only going to be a small remnant of underground, true to the core principles of blockchain and crypto, that's going to know how to do this using decentralized protocols that doesn't require the same type of KYC, right? Know your customers and personal information. Anyway, let's get back to this because I don't really have that much time. Directly respective without US dollars. Each enterprise is directed to consider only cryptocurrency assets that could be evidenced and stored on a US regulated centralized exchange subject to all applicable laws. What that means is they're not just going to take any shitty meme coin that just popped out the other day that somebody on Twitter is trying to tell you is going to go to 1 million. They're only going to go with, if it can't be regulated on a centralized exchange. That's very key. That's what I'm saying. They want to make sure it's on a centralized exchange. Why? Because a centralized exchange is in cahoots with the traditional banks. They are the traditional banks for the crypto. Coinbase, for instance, which we're going to get to in a minute. So if Coinbase won't mess with them, if a centralized exchange won't mess with them, they're not going to do it. That's the point. So we're going to be talking about the Bitcoins and the Ethereums and the Litecoins, and they're gonna be pretty selective about what coins they're gonna use as collateral. They're not gonna let you come in there with some brand new coin you just traded on some decentralized exchange or copy the paste code from somebody who just came out with the coin yesterday. And they're not just gonna do any old coin. All right, that's what I'm saying. Additionally, each enterprise is directed to consider additional risk mitigants per their own assessment, including adjustments for market volatility and ensuring sufficient risk-based adjustments to the share of reserves comprised of cryptocurrency. Prior to implementing any changes, each enterprise must submit and receive approval from its board of directors prior to submitting to U.S. federal housing for review. So there's that. So, one thing that you could do if, you're worried about the speculative aspect and volatility of the asset, you can trade it. You can just, use a stable coin. Then you don't have to worry about the fluctuation, right? Because I don't know how they're going to deal with the volatility as far as like, okay, let's say you put Bitcoin up for collateral, then Bitcoin goes up. Are they going to increase your access? Are they going to, Are they going to allow that to transfer to, your mortgage and all that? We don't know. Some of those things have to be worked out. But we're already in the mix. Let me show you this real quick. This is Milo.io, real estate powered by your crypto. So I did what I was going to do, and I will do later, a story on real world assets, because now they're really starting to flood the game. They're really seeing a lot of potential in that, as far as treasuries and bonds, and being able to tokenize stocks and different commodities like oil. Gold already exist, right? But we're going to go ahead and get into this, because this isn't new either. Like I said, Propy, there's a link in my description right now that you can go to, and you can check out Propy. I've done videos on Propy as well. Propy is Ethereum based, and they are related to the real estate. So now what we're seeing is different blockchains start to pop up. And partly why you're going to see more of these different things pop up more and more in the future is because now you're starting to get the conversations of how to regulate some of these different markets. So now, like, all the different companies that have been working on things on the low for the last few years that didn't want to pop out before the whole XRP Ripple situation, now you're going to see, as they get more comfortable that there's clear-cut regulations, that they're not going to get caught up in a trick bag, you're going to see more stuff like this happening. And this is just one of them. And what is a crypto mortgage? A crypto mortgage allows you to use Bitcoin or Ethereum as collateral to buy real estate without selling your digital assets. You can unlock up to 100% financing. So they're saying they might just go ahead and give you the whole bag. But they're only dealing with Bitcoin and Ethereum. And that's understandable, right? You would expect that a lot of these, if they're dead serious about it and they understand crypto, they're not just going to take any kind of crypto for collateral. They might not take your Shiba Inu. I'm sorry. They might not take your new Trump coin, meme coins. I'm sorry. They might not take your, you know what I mean? They're not just going to take any old. They're going to take something that's tried and true. They're not going to risk their business model on a fly-by-night meme coin. At least Milo doesn't seem like they want to do that. Your crypto, your home. Qualify with your crypto. Use Bitcoin or Ethereum to qualify for mortgage approval. Hold your crypto. Keep your crypto and its growth potential. Selling is not required. Secure custody. Your crypto maintained securely held by industry leaders. Look at this. BitGo and Coinbase. Coinbase is they're very infused in these new types of things like this. So is BitPay. Now, BitPay's been on the low. I don't know what they're doing right now, but BitPay was a good one. But this is BitGo. So they're saying, like, hey, they're going to be a intermediary, so to speak, escrow, if you will, type of situation. No down payment. Get up to 100% home financing with zero cash down. Yes, I mean, that's huge, though. That's beautiful. Because this is going to make it to where those of us have been stacking this crypto up for a minute. Hey, when it's time to sell, maybe we don't sell. Maybe we use that to leverage it for buying a home or buying other type of real estate or other types of investments. Now we can make the same kind of moves that these big wigs in Wall Street have been making for years. Now technology and innovation has afforded us to make some of these same types of moves. Now you could take your crypto bag, weigh it against a house. Now you got a house. You pay back the crypto. You didn't even put no cash down. You have the house. Now you have the house and the crypto. You do that. You flip it. You now you're building generational wealth in different ways that weren't available before. I love it. Crypto mortgage terms, collateral accepted, Bitcoin and Ethereum, interest rate. Ooh, okay. So, there's going to be that. Collateral pledge, 1 times property value. Okay. Loan term, 30-year fixed, interest only. So it's fixed. Loan amount starting at $275,000. So that's the minute. I guess that's where they start at, which, depending on where you are, you know what I mean? It's not a lot. You can't buy a home for that here. In Texas, you absolutely can. Loan to value up to 100%. So they can say they'll give you the loan on 100% of your, and that's probably why they're saying only Bitcoin and Ethereum. See, usually, like when I was showing you what I did on the DeFi, is they'll loan you up to 80%, right? A lot lower interest rate though. They're saying they'll loan you up to 100%, but they're only dealing with Bitcoin and Ethereum. Why? Because they expect, especially over 30 years, that Bitcoin is still going to be here. And it is going to continue to increase in value. They probably are not as confident and Dogecoin and some of these other coins. It makes sense, right? So here we go. That's just a little bit more qualified with a mortgage with crypto. Whether you're a long-term holder or an active investor, Milo lets you leverage your crypto to invest in U.S. real estate, access up to 100% loan to value to purchase without selling your assets. It's good stuff right here, y'all. So I just wanted to show you that. We're going to go ahead and run through it just to show you this is real. Federal Housing Finance Agency, crypto to be counted as mortgage collateral. I'm just showing you that this has been reported all over the board. This has even been reported in the New York Times. Crypto industry moves into U.S. housing market. This is where we're going. This is not where we're going. Excuse me. This is where we're already at. As a matter of fact, we've already had some of these abilities. They were just kind of tinkering with it, doing pilots with it, doing experiments, doing one-offs. Goldman Sachs has already loaned against Bitcoin for a house a couple years ago. They were the first ones to do so. Doesn't mean that it was kind of like a one-off, though. It's like one of those where let's just see how this goes. Let's do a test run. Let's do a pilot. Let's do a trial run. We'll see how it works. We'll see if it makes sense on the financial side. Okay, it did make sense. And now, once a Goldman Sachs does something like that, what it does is it triggers other banks and, saying different, industries to feel like, hey, this could work out. Kind of like how when Michael Saylor from MicroStrategy, when he started putting Bitcoin on the books, and then Elon Musk did the same with Tesla and put 100 million worth of Bitcoin on the books. And you start seeing all these different big wigs and big companies start to leverage crypto. All of a sudden it becomes more acceptable. All of a sudden other people within that same realm of influence and income start doing the same kind of things. When Bitcoin ETFs officially became a thing, well, now it's on Wall Street. So now BlackRock wants to do it. Now ARK Investments wants to do it. Now Fidelity wants to do it, et cetera, et cetera. Now you have the biggest pension fund in Japan, Bitcoin, allowing Bitcoin to be introduced into their fund. That means they're betting on the future of Bitcoin. I just did a story about the Texas governor putting it on the reserves, the Treasury reserves for the state of Texas. So now we're going to see more and more of this. This is what's going to also make Bitcoin more scarce, which is why, hey, a person like me just makes me that much more want to put that much more of my income into Bitcoin and use Bitcoin as a store of value, as some people hoard gold, which I also have, but Bitcoin, because we're expecting over time it's going to go up and up because it's becoming more and more scarce. There's only a fixed amount of Bitcoin, and it's being bought and utilized faster than it's being created. So the beauty of something like this, it being introduced as being able to use as collateral, is you don't have to sell it to do it. You just have to have it, and then you put it kind of like in an escrow and have Coinbase kind of hold it on your behalf. But then once you pay off the loan, you can get that Bitcoin back. So you never really had to relinquish or sell your Bitcoin, which means two things. One, you get it back. Two, it's not a tax event if you borrow against it. This is what like millionaires do all the time. Billionaires do it all the time. Okay, I got the Elon Musks of the world. Okay, I got $100 million worth of my stocks. I got to do this big move. I'm not going to sell my stocks. I'm just going to borrow against it. Now I'm not being taxed. This is like how they get around certain things. So we could play the game too. And that's exactly what we're going to do. Blockchain crypto gang, tap in, y'all. Make sure y'all like, subscribe, all that good stuff. Share this information. You can hit me up at my crypto slang at gmail.com for story ideas or questions or whatnot. But, I just want to give you the news that you're not going to see on the mainstream. I don't want to give you the moon boy stuff. I want to give you news that you can use, information that you're not going to see on the mainstream, that you can base your decisions on from there. And also, like I said, if you want, you can go to Odysee, which is in the description, and you can check out some of the past broadcasts from years ago on CryptTalk podcast, just to see how accurate I've been. Anyway, y'all, appreciate y'all. Thanks for your time. Peace.